Ever felt the squeeze of high interest rates on your wallet? Well, hold tight because the Federal Reserve just dropped a bombshell that could mean more breathing room for your finances. In a move that's both thrilling and slightly bewildering, the Fed has signaled not one, but two more rate cuts in 2025. Intrigued? Stick around because we're diving into the juicy details of what this means for your money, your mortgage, and your mood. Let's kick things off with the Fed's latest dot plot, a chart that's more exciting than it sounds. Picture this, a scatter of dots, each one representing the opinion of a Fed official on where interest rates are headed. And this time, those dots are telling a story of relief for the economy. After slashing rates by a hefty half percentage point, the Fed isn't done. They're projecting another half percentage point drop this year, with more cuts lined up for 2025. This isn't just a number game, folks. It's a lifeline for an economy feeling the pinch. Why should you care? Because lower interest rates mean cheaper loans, better mortgage rates, and a potentially roaring stock market. For those of you dreaming of home ownership or looking to refinance, this could be your golden ticket. And for investors, it's like the Fed is handing out free passes to the economic roller coaster, promising a ride less bumpy than expected. But here's where it gets spicy. The Fed's move to cut rates twice in 2025 comes after a period where inflation was the villain in our economic story. Now, with inflation cooling off like an overzealous summer sun, the Fed sees a chance to bring some balance. They're not just cutting rates, they're recalibrating an entire economic ecosystem. The unemployment rate, which has been a bit of a roller coaster itself, is expected to rise slightly but stabilize. This isn't just about numbers. It's about lives, jobs, and the heartbeat of the economy. The Fed's actions suggest a belief that these rate cuts will help keep the job market from tipping into turmoil, providing a soft landing for the economy rather than a crash. Now, let's talk about the real impact on your life. If you're in debt, those lower rates could mean less interest eating into your monthly payments. Planning to buy a car or invest in that dream project? Suddenly, the financial landscape looks a whole lot friendlier. And for those with savings or investments, you're looking at potentially higher returns without the nightmare of soaring rates. But wait, there's more. This isn't just about saving you money, it's about igniting economic growth. Lower interest rates stimulate spending, encourage borrowing, and can kickstart industries that have been holding back. It's like the Fed is turning on the economic sprinklers after a long drought, hoping to see green shoots of recovery and expansion. However, here's the plot twist. While the Fed is cutting, they're also watching. Inflation, that pesky beast, isn't completely tamed. They're balancing on a tightrope, ensuring they don't cut too deep or too fast, risking inflation's resurgence. It's a delicate dance of numbers and forecasts, where every dot on that plot could mean the difference between economic boom or bust. So what's the takeaway from all this financial wizardry? The Fed's latest moves signal a cautious optimism. They're not just reacting to the now, they're planning for a future where your financial health has more room to thrive. This isn't just about policy, it's about people, your family, your dreams, and your financial freedom. But remember, the world of finance is as unpredictable as a plot twist in a thriller novel. The Fed's projections are like the weather forecast for your wallet. Helpful, but not set in stone. Keep an eye on the horizon, because in economics, the only constant is change. And there you have it. The Fed's bold strategy laid bare. Lower rates, less inflation, more growth. It's the economic trifecta we've all been waiting for. Now go forth with this knowledge, make smart financial decisions, and watch how the story of your economic life unfolds with these new twists and turns.